Afternoon, everyone. I'm John Hogsmeyer out here in North Platte. It's my honor to serve as the state chairman of our Nextgen Young Agent Group. And I'd also like to welcome our Nextgen members from across the state to our fall 2022 Lunch and Learn webinar. As always, just want to first give a shout out to all of our Diamond and Platinum industry partners. Without them, we wouldn't be able to do items such as this and many of our other Nextgen functions. So big thank you to them. A few housekeeping items for today's webinar. Just as in the past, during the presentation, you'll be sent 2 questions to answer to verify your presence and attention. You must answer both questions when you receive them in order to receive the CE credit today. If you're having any trouble, type your answer into the chat box and we'll make sure that we get it taken care of on our end. So we will be monitoring the chat and have time to answer any questions at the end of the program. So without further ado, let's get started. This fast-paced hour of continuing education looks at the wholesale marketplace from a variety of perspectives. For some producers, the topic of excess and surplus lines will be a review of the distinction between admitted and non-admitted carriers. For others, it will be an introduction to this distribution channel and methodology. We will review the state of the E&S marketplace and see examples of where it succeeds. Finally, we will learn how to interact with the wholesale or broker effectively in these difficult markets, which we all know is continuing to grow and grow year after year here. So without further ado, I'd like to introduce Rick and Diane, who have so graciously agreed to give this presentation today. Richard Pitt's a private practice attorney in the insurance industry. Rick serves as vice president and general counsel for Arlington Row, an insurance brokerage and managing general agent headquartered in Indianapolis. Arlington Row is a bronze partner with IIAN, so big shout out, appreciate that. Rick also serves as general counsel to the Independent Insurance Agents of Indiana. As counsel to the Big I, Rick speaks annually at the association's New Law Seminar and teaches various seminars on insurance and employment-related matters. He has also presented continuing education seminars to insurance professionals nationally and in Illinois, Kentucky, Michigan, Ohio, Tennessee. Joining Rick today is Diane Smith, the marketing manager for Arlington Row. Diane is knowledgeable in Arlington Row specialties and serves as a key resource and advocate for producers on product, department, and company knowledge. I want to thank both of you for joining us today, and I'll turn it over to you because I'm sure you got a good program for us.
John, Jacelyn, thank you both so much. And some of you may have heard this before we got going here. We are delighted to be here with you. And also I want to give a shout out to the Big I in Nebraska. As I work with the independent insurance agents in Indiana and Kentucky, I was sharing earlier that your association does you well, both on the volunteer level. John, thank you, and Jason on the staff level as well. They are respected very much throughout the nation as a top drawer organization. So it's our great pleasure to be here with all of you today for what we hope is a very, very fast-paced hour. We would also like to be very much, if we can, informal. If you heard any of our conversation, we're delighted that you're here. Jump in. We'll try to reserve a little bit of time for any questions that might come up toward the end if time permits, but there's a pressing matter in that question that you think needs to be answered right now. Please let us help and let us answer that. I'm going to hang off with a word about Diane here in just a moment. I actually have to start out with a little bit about our title, and John, what a great description of what we're going to do today. You'll notice it says doing business well in a harder market, and I understand that some of you are relatively new to the industry, and so I want to first describe, well, wait, what do you mean harder market? I thought this was a hard market, and I was looking at that and I thought, you know what, I remember when Nextgen, you got to put up with the stories that start with I remember when. This is very young in the industry, when asbestos abatement contractors had to have coverage, and the going rate at the time, I recall, was for a $500,000 premium, you would be insured for 1 year with a maximum exposure to the company policy limits of $600,000. In other words, $500,000 in premium for $600,000 in coverage. That, friends, is a hard market. And it's always an issue of a degree of or it's an issue of degree, if you will, but that's why we describe it as not being necessarily a hard market today, characterized truly by a lack of availability in any form or fashion, but rather a harder market, and one that may send you into the E&S, excess and surplus lines market overall. So with that introduction here, let me move on here, and I will again thank John for the great introduction. And Diane has done such a wonderful job with the Francis Rowe Center for Professional Growth at Arlington Rowe, particularly with helping folks who are younger or newer to the industry with regard to all of this. And I wanted to have Diane join us today and speak to all of the issues here that we have, because she's so attuned to where folks are with regard to the younger, the newer folks here. And one last, if I can, and I will do this here if I may, I have one other gig. I am the executive vice president for the Mutual Insurance Companies Association in Indiana. But if you can look very closely at the A in our logo, and yes, I am holding up my coffee cup here, that is that we got some corn there going on. So greetings from corn country. And again, we'll leave it at that. We'll leave it at that. So I've asked Diane to jump in with us at any point along the way. Diane, we'll jump in, and John's talked a little bit about what we'd like to get accomplished with regard to today. For those of you who are new, talking a little bit about what the basics of the excess and surplus lines market is. Why does it exist? It is a unique animal to the United States. And some of the basics in the background here, and then spend a few minutes chatting about our friend at Lloyd's of London. And you can see I wanted to have some fun with it, talk about who is this Lloyd character and that kind of stuff. Then a couple minutes about today, the E&S market itself, and exactly what it looks like, where you're likely to encounter it, where it does some of its best work, and the like. And then Diane particularly will help us bring home the conclusion here with, when you're interacting with a broker or a wholesaler, what's the best way to go about it? How can you maximize your chances for success, minimize lost or wasted time, and the like, and how best does that work to interact with them? And I'll give you a quick preview, if I can, of that very last topic here, because again, I want Diane to take the laboring oar on that one. I always tell folks on the retail side, and I do a lot of retail continuing education, if you will. I always tell them why you're there. One of the things I always say is tell them why you're there. In other words, hey, I've exhausted, of course, all of my standard marketplace options, and then tell the folks that you're dealing with, and this could be any broker on the wholesale level, I'm here because, for instance, I know what I'm doing. Let's say it may be manufactured housing, or maybe it's a high valued home, but I don't have access to the market, or it may be, hey, I'm here because I don't know what I'm doing. And I think the classic example for many of us is aviation. If you're fortunate enough to get to write an aviation policy, well, there's some unusual things about those aviation policies, and it's okay. In fact, I think it sets the tone and creates the relationship. If you come in and say, look, this is my first airplane. In fact, for years, I've had a seminar called How to Get an Airplane Off Your Desk. Personally, I thought the title was hysterical, but no one else ever seemed to laugh. And I'm still throwing a no-hitter, although I did get a smile out of John on that. Tell them why you're there. I'm there because I need access to a market, or somewhere in between, or I need help, I need expertise, and the like. And again, we'll amplify on that a little bit more as we move forward here. So Well, we want to start out with some things about, what is ENS? And I think for a lot of us, it can be a little bit daunting. You know, uh, is this all on the up and up? Is everything square? And in fact, it very much is. And I'm borrowing here from the folks at the old AAMGA, now part of the WSIA, which is a wholesale and specialty insurance association. Just so everybody knows, that's a trade association for the excess and surplus lines community, if you will. And you can see here what's on the screen is that excess and surplus lines doesn't mean that it's cut rate or that it's under the table or that there's anything wrong about it. Rather, it's usually for the unusual, the difficult, and things that require a little bit more specialization. And so, I sometimes I think that there's a stigma attached to the ENS market that probably is not deserved. In fact, many of our larger companies who have a complete standard lines package for you, whether it's commercial or personal lines, also have a company that functions as an excess and surplus lines company, being non-admitted, as we'll see in just a second. And literally, in some instances, I've heard from some of our friends in the industry that they say, hey, our admitted company can't do this. And literally, they walk down the hall and hand the risk over to one of their colleagues who can handle it on an ENS basis. So again, just sort of setting the table here with regard to all of this. Sometimes the ENS market does do some stuff that is difficult. You've heard maybe of insurance for I'll say certain body parts. You can see actor's voice, that kind of thing. Precious artwork, stuff that the standard market won't handle. Much of the earthquake and a lot of pollution remediation cleanup stuff is handled through the ENS market, even though it might be with an admitted carrier here as well. So again, there's a lot of crossover between the two, but generally speaking, this is what we're talking about when we talk about ENS. Okay, why is it that you have somebody who can walk down the hall to somebody else that's in the same family of companies, and one can handle it excess and surplus lines, but they can't handle it on an admitted lines basis? Well, okay. This is why ENS exists only in the United States throughout the world. We still regulate insurance on a state by state by state basis. And so as a consequence to that, we have companies that need to be admitted to do business on a state by state by state basis. And getting admitted in all 50 states, although it's gotten easier over the last couple decades, it's really kind of a pain. And also, you have to, once you are an admitted carrier in each one of those states, comply with their individual state rules with regard to particularly rate and form. How much you're going to charge and what are the forms going to say. And that's why most of our admitted companies use, let's say, Insurance Services Office forms, American Association of Insurance Services forms, AAIS, or some others, because they're standardized and they can standardize them across industry lines. Well, if you are not admitted in a state, but used as, again, an excess or surplus lines carrier, you're freed up from some of those restrictions, and you can have, as I say, familiar phrase, freedom of rate and form. Now, some states, the bottom bullet point here, do still require, even if you are not admitted, as the phrase is used, they still do what's known as a whitelist. Say you are a permitted excess and surplus lines carrier. But again, you've got availability of the market. And so what we really want to emphasize here is again, you may have an admitted side of the house, not always, an admitted side of the house and a non-admitted side of the house, because of the regulatory burdens is kind of the crucial thing here with regard to that. And I got a little ahead of myself here. This slide really sort of emphasizes the whole freedom of rate and form, freedom to tailor coverages and the like. So I think that you get a flavor for, again, there's nothing wrong with the ENS market. It's just something that's a little bit different. And of course, it is not going to be your market of first choice. And nor do I think most surplus lines brokers, which is the way that you access the ENS market, want it to be your first choice, because they want you to exhaust, your admitted companies first. And in fact, as a matter of due diligence, typically you're required to get at least a couple or 3 declinations before you head into the excess and surplus lines market. The key thing, though, that is different with regard to the ENS market is the top bullet point that you can see here. The guarantee funds are not available if the carrier were to happen to go insolvent. And that's why I think that there's again, sort of this partial stigma, if you will, that's attached to the ENS market. But you have to evaluate that on a case-by-case basis. So the idea here is that, there's pluses, freedom of rate and form, and minuses, which include lack of access, generally speaking, to the guarantee fund. Okay, so you've got a risk, you've exhausted your standard marketplace, and I can't get this placed. What do I do? Well, you probably head to what we would typically call a surplus lines broker. You may also hear the term wholesaler, or MGA or MGU, managing general agent or managing general underwriter. Now, in most all of our states, there is actually a definition of what constitutes a managing general agent. However, inside the industry, for those of you who aren't familiar with this, inside the industry, these 4 terms, all 4 of these terms, broker, wholesaler, MGA, MGU, kind of get to be like scrambled eggs. Frankly, they kind of get used interchangeably and without a whole lot of precision, and frankly, without a whole lot of legal precision, something near and dear to my heart, that really sort of is important, I think, to understand, at least at a surface level, so that you feel, again, more comfortable in the ENS marketplace overall. Typically, if you hear surplus lines broker, that may be a reference to a licensing situation. Another term that's used is a wholesaler as opposed to a retailer, which I think does make some degree of common sense. But then, even then, it gets a little bit dicey about this whole issue of MGA and MGU. Typically, to be a classic general agent, managing general agent, there is a requirement that the MGA have binding authority, in other words, eyes and ears of the company, and also have underwriting authority as well as claims authority, which is why some people use the more generic term of wholesaler, and again, from a licensing term, surplus lines broker. So a point at which you can access the surplus lines marketplace. Again, for everybody today, the crucial thing is, don't be embarrassed for a minute. Do not be embarrassed for a minute to ask, what are you? What's your role? Are you truly an MGA, or are you a wholesaler? Do you describe yourself as a surplus lines broker? Because if there's a question with regard to this, you don't want it to come up after the fact. You want to know beforehand. Typically, again, MGAs and MGUs will usually have the authority to bind. They can bind the company to issue a policy, aka have the pen. But that's not always 100% true. And again, don't be embarrassed, because bottom bullet point, no real precision within the industry. So I always believe that a picture is worth 1,000 words. And I've used up well more than 1,000 words at this point in time. But if you take a look at the distribution channel here, you can see here, I think, the simple form that we typically think of. And I don't need to spend a whole lot of time on this particular slide. I think everybody's, this is kind of what we do every day, right? Well, okay. And by the way, we will be delighted to share with you our slides today. If you'd like, just let us know. And here's the one that's a little bit more complex, which is, if you look at the far left-hand side, again, that's sort of the standard model, the easier model. And I've used the phrase retailer here for all of the folks who are on the front line. By the way, in my private practice, I maintain a client list of lots and lots of retailers. So when I say it's from the heart, I mean it's from the heart in my practice. You might access the surplus lines MGA wholesaler to get to the carrier, the middle line that you see here. And it might even be a two-step here overall, that there may be a broker or wholesaler involved, and there may be two relationships that you get through to get to ultimately where the paper is, as they say, who has the paper. And that is not at all unusual. And again, because of that third one that you see here, it's always a good idea to ask, well, okay, do you have the pen, or are we going through somebody else? Because the last thing you want to do is have a quote sheet or a policy form come out. You go, wait, I'm with this. I thought I was with them. I thought that was the. You don't want to run into those situations, because you can become very compromised, if you will, embarrassed perhaps in front of your insured. So ultimately, what you want to do is know where you are kind of in this kind of this distribution channel here. Okay, I'm going to talk about this for a second, and I'm going to turn things over to Diane for a moment for any questions or comments, observations that she might have. Why does this work? How does it work? And this is one example of where the E&S market functions well. And some of you may have had the opportunity to deal with this. And it's a favorite topic of mine. In fact, friends, I could go on about the cannabis industry for hours and hours. Just the insurance implications. I don't want to leave anybody with the wrong impression here. Just the insurance implications. But why does the E&S market work well? If you take a look at this slide, one of my favorite phrases in my cannabis and insurance seminar is this: still illegal under federal law. And as we speak today, cannabis still is a Schedule I controlled substance. And if you're curious about what is a Schedule I controlled substance, skip the middle part. Look at the bottom one here. Look at cannabis's neighbors on Schedule I of the Controlled Substances Act. Yes, that is heroin, peyote, and LSD. Well, think about your marketplace. Think about your friends in Iowa, for instance, who have gone medical. There are about, I think, 17 to 20 states out have gone recreational. Like, how can we be doing this? Well, the insurance aspects of that are being handled largely through the excess and surplus lines market. Whether you like this or not, and I tell people this isn't one of those things that is a red or a blue issue or anything like that. Whether you like this or not, if those folks are going to be in business, they need insurance. And the E&S market was the market that stepped up and responded. Now, look, as you see here, premiums are higher, availability is more difficult. and it's getting a lot better. But by and large, when the standard marketplace wanted absolutely nothing at all to do with cannabis, which was a few years ago, the E&S market was there. Again, people didn't necessarily like the prices, didn't necessarily like the terms, but it was there, even given the illegality, if you will, at least in name, underneath federal law, even though states were in fact legalizing. So with that, I'm going to pause for just a second. Diane, anything that I have motored through too quickly?
No, we don't have anything on chat. There's a little activity, but no questions. One thing,
Okay.
On the cannabis piece, as part of what we do internally, and I know, Rick, you're aware of this, we do education of our own staff. And we've talked an awful lot about cannabis. And to Rick's point, it doesn't matter, which side of the fence, where your state is, the E&S market, just to kind of amplify, Rick, some of the things that we see. It's not only growers, but it's manufacturers. It can be trucking, it can be distributors, sellers. We're talking like CBD oil, storefronts with gummies, baked goods, those kinds of things. And the reach is very, very broad. We could probably do a couple hour session just on cannabis alone.
Can I make one bad dad joke?
Sure. Absolutely.
She said baked goods.
Baked goods. Okay. Yeah.
I have to tell you, I always make too many bad dad jokes. I actually stumbled into, I was talking about cannabis at a seminar in Kentucky about a week ago. And I said, there are a lot of people out there that think it's high time that this was legalized. And I paused and I caught myself after, and I thought, oh man, it's just awful. It's just awful, everybody. So no, but Diane's absolutely right about that, about the incredible developments with regard to that marketplace. And I will say this, and this is where I'm going to be a fan of the E&S market, friends. It doesn't happen because that business doesn't become a multi-billion-dollar business in all of these states were it not for the E&S market overall. Okay. So thank you for that. All right. We're going to motor forward here and talk about this Lloyd's of London and why are we doing what we're doing here. And I do have a couple of serious points with regard to all of this. I don't know if anyone is familiar with really what Lloyd's of London began as and started out as. And I promise a very, very short, if you will, history lesson here. Lloyd's of London is, or began as, kind of like a marketplace. And in fact, today still is a marketplace. So this is history, but it's also current event, which is, it's kind of like the New York Stock Exchange. It's buyers and sellers coming together. Well, it was originally seafarers and all that sort of stuff, but people willing to trade risks. So Lloyd's of London is, in essence, a place where buyers and sellers can meet. However, they started trading and taking risks from each other, and that's what developed eventually the Lloyd's of London as we know it. And again, however, what happened over the intervening centuries, which I think is so fun, is this. Eventually, that marketplace grew and grew and grew to become so sophisticated that Lloyd's actually became a company as well as a marketplace. So if you wonder what Lloyd's of London is today, Lloyd's is an admitted carrier in the states of Illinois and Kentucky, as well as in the Virgin Islands. Kentucky, because of their equine, because they cover so many horses, and the group of underwriters who are at Lloyd's are also surplus lines and also reinsurance as well. I mean, it can get really, really sophisticated here, but Lloyd's is actually admitted. Again, it's admitted, and it's admitted paper in Illinois and Kentucky. and yet it's excess and surplus lines in the other states as well. And by the way, it's a very close-knit relationship between our friends at Lloyd's and those of us in the US. This is from Lloyd's itself, and these are the most recent statistics that are available. The United States marketplace is 40% of Lloyd's global premiums, and it's of course in the tens of billions of dollars that you see here. So I mean, it for what started with a, hey, let me tell you a story, coffee house exchange has become obviously multi-billion dollar industry. Again, for our purposes today, bottom bullet point here is the important one. If you would happen to wind up with a risk that wound up going out to London to get to Lloyd's, it's not necessarily a bad thing. In fact, it could be quite a good thing. Yes, it's expensive. Yes, it's difficult to do, but it can be a very good thing, because if you think about this, you can see the ratings that are there of the companies that do business in Lloyd's, and A to A plus, you know, depending on all the way down to the KBRA, the newest of the rating systems. There are some financial giants in the Lloyd's market. So again, don't let it be stigmatized, and also don't let it be overwhelming. Don't let it be overwhelming. There is a way to get out there. The folks here in the United States, well, and really throughout the world, are the folks who they're called cover holders, that they have access to get to the folks at Lloyd's, and they will help guide you through the process. Our company, Arlington Row, is a cover holder at Lloyd's. We have access to a couple of syndicates. Syndicates are the individual groups within the Lloyd's exchange. And sometimes we work through a broker on the London side. Sometimes you don't. That's why you see that dashed line there. But don't let Lloyd's overwhelm you. So it's again from the folks at Lloyd's. And I've got one more here before I'm going to hand things off permanently to Diane on this. We've kind of hinted around at all of this in the ENS market, and I promise I feel like I'm the person who kind of tees it all up, but Diane's going to deliver the payoff for you here, folks, which is okay, I get it, I'm supposed to do business with these folks when I need to. How do I do it? And I promise she's the real star of the show here in connection with this. But just a couple more points on all of this. And pardon me, this is from the NAIC, National Association of Insurance Commissioners. You know, it's the trade association of all the state insurance commissioners throughout the country. And you can see the statistics that they've gathered about the ENS market. First of all, it's surging, and that's why we say we are in a harder market. Companies lose appetite, lose interest, lose capacity, and they start passing on risks that normally would have been in the standard lines. And that's moved into the excess and surplus lines arena, and that's where you see a 15 and some change growth in premium just a couple of years ago, which was a pretty big spike. Also, you can see that this is not quite 10% of the PNC side of the marketplace. So, I mean, again, this is not fly by night, shady, or underhanded in any form or fashion. In fact, it's a pretty good sized segment of the industry overall. And again, Lloyd's has got a big hand in that 66 billion. And the bottom bullet point here, again, as mentioned via the cannabis situation, I think that what you see is this. And this is actually a nice segue, I think, into talking about dealing with this overall. Cannabis is the great example. If it were not for the ENS market in the beginning, the development of the cannabis industry whether you think it's a good thing or a bad thing, would not have happened because people have invested millions to billions of dollars in that industry and they want insurance protection. And the admitted marketplace simply would not have responded to it at all, but the E&S market was willing to do so. What has happened since then being 2016, 2017, is after the excess and surplus lines market got into the cannabis field, the admitted market has started to follow in some of these states. But it really makes the point that the NAIC is making, which is without the E&S market, there were folks that would not have insurance and therefore might not be in business, which leads me to my last point here for everyone with regard to this is if you're in the E&S market, prices are going to be likely very much above what you anticipate, But you can go to your insured and say, look, all my standard markets passed, or, I did my due diligence, we've got declinations, and say, what other options do you have? And I don't mean to overly emphasize that they've got you over a barrel, but I do want to say, look, there is a premium to be paid, if you will, for getting some of these more challenging insurances overall. And that leads to the slide about, okay, when am I going to wind up in the E&S market? And again, it's not going to be an everyday event. Products recall, manufacturers in particular, is a very difficult to place coverage. It's going to be a high dollar item as well. It's rare, but it does happen. Reps and warranties insurance, that's representations and warranties insurance. That's insuring, if you will, the great big stock deal and the representations and warranties that are made. It's a very, very sophisticated coverage, very, very expensive, but it's one in which the E&S market prevails. There is a new one, and one that unfortunately the need continues to grow every day, which is active assailants. And there is a substantial and growing marketplace for it, albeit it is largely an untested coverage in terms of underwriting, responsiveness to particular situations here. This used to be called active shooter insurance. It's now active assailant and the like. And again, this is where the E&S market excels. Cyber is another example that I think that we're all more familiar with. And also, last but not least, here is one that we can encounter almost every day. Many of our companies do not like to write homes that have a value in excess of around, Diane, help me with the number here, 750,000.
A million. What?
A million. It's kind of nudged up a little bit lately. And if the ceiling, if you will, for their underwriting appetite stops at 1 million, hey, there's nothing more, no disrespect intended, there's nothing more vanilla than writing a homeowner's policy, right? Well, you still may wind up in the E&S market if the home happens to be one of those homes that exceeds $1 million in value. So this is where the E&S market, I think, excels, and where you're likely to encounter, particularly numbers 4 and 5 here that you see on the list. And with that, I will turn the wheel, so to speak, over to Miss Diane and say, okay, if I'm gonna do it, how am I going to do it? What am I going to be doing here? And I'll advance forward, if that's all right.
Great, Rick. Thank you so much. And thanks again, Jocelyn and John for letting us have this opportunity today. So I'm going to kind of go through these slides quickly, but we do a lot of educational updates and training, especially again for people newer in the industry, and setting expectations of how to work with us. A couple of things I want to note from Rick's presentation that will carry us into these slides. He noted Lloyd's of London, and that is a huge, huge market for us. But most of your brokers are going to have a plethora of carriers. where we are at. We have over 200 carriers, and it is not always your business or need to know who you're going to deal with. As Rick mentioned, bring a submission and a risk to us. Let us know, why are you here? There is some hand holding that goes along, and your expectations of us helping you out to begin with until you get a little more well-versed in this marketplace. So first of all, you've exhausted all your standard carriers. I mean, John mentioned, I think the words you used, difficult marketplace, John. It is indeed difficult. It's changed. Carriers have tightened up their underwriting guidelines and gotten off lines of business. So you get a risk and you've exhausted all your carriers. What do you do now? Maybe you've worked around in your agency and asked some of your fellow producers or the agency principal, where do I go with this? Well, going to a wholesale broker can be a scary prospect. I was an agent for 15 years, and I remember the first time I was told to access a broker. I didn't know who they were. I mean, I was very well versed in the 4 standard contracts that we carried. And here I had to step into that space. And what do I do now? How do I get acknowledged and someone to work with me on this risk? Again, you're probably comfortable with those standard carriers and their guidelines, but don't be afraid to come to a broker, and we will help you if you question where to place that business. Standard carriers, again, versus brokers. Hold on just a second.
Yeah, I'm sorry.
I've got this thing coming up here.
I answered the roll call.
Oh, okay. I was like, where did it go?
Yeah.
Okay.
I answered.
Let's see.
All right, were we ready
go
there?
to the next slide.
All right, there we go.
Risk opportunity. Thank you. So if we look at a risk, I'm going to give you a sample, and Rick mentioned the $1 million home. I actually am going to use that as a submission. So you get an insured calling you, and they own a business or a home. In this case, we'll use a home, which needs some coverage. That's your risk, and they reach out to you in your community. You are the person they're familiar with. This is who they're coming to. You review the risk, and you do some upfront underwriting. That is your job as a licensed agent to do that, see what the risk entails, talk to your insured about what they have, and then you submit the risk to a standard carrier. And that's when the standard carrier may come back to you and say, you know, I don't want any of this, or maybe I only want a portion of this. That's when you go to the broker. So the story that I have to tell is actually that $1 million home or greater. Most of your standard carriers will write up to that, but your underwriters maybe get a little itchy scratchy is what I call it when you get beyond $1 million. And maybe that insured is a very affluent person with unique hobbies, maybe collectibles, maybe a secondary residence, and then a high valued 5 million plus umbrella. So a lot of your standards don't want to touch that. You know, go to your broker. In all likelihood, they will have carriers, maybe some standards, maybe some ENS if it has some hair on it. Maybe the high value home has experienced a couple losses, maybe water losses. That's a very common loss, and you need to take it out to market. In some cases, they may have admitted, and in other cases, you may need to park that risk in an ENS carrier until some of those claims fall off. So don't be afraid to give them a call. If your standard carrier wants to stay on a homeowner's risk but says, I can't write that umbrella, you can bring a monoline umbrella or even excess to a broker. So maybe the carrier says, I'll write 1 million, but I will not write 5. And then you could bring the extra 4 million to the broker. Next slide. There's example 2 of a risk opportunity. So here's here's another risk opportunity, and this one is very of the moment. I talked to one of our brokers in healthcare and human service today, and we talked about the unique, the unusual. You know, we like to sometimes say strange things that are up and coming that maybe you've not seen, but they are coming to your Main Street America. And you reach out to the broker, and you know the carrier is not going to have an appetite for this. And then we assess that and we work with you. So the example I have are new ventures and startups. And the example that we talked about this morning were invasive procedures. There are a lot of med spas that are popping up across the country. Sometimes you see in your workout facilities, they have health like storefronts where you can get the nutritional IVs. These are unique things that we've just started to see come our way, and we have a lot of them. Anytime in a type spa situation where they're using needles, common things, you'll see the eyebrow enhancement, maybe permanent makeup. Anytime a needle is getting close to the skin and invasive, that is when the standard doesn't want to have anything to do with that. So it's a very good example of bringing something to a broker and letting us help you with situations like that. Now, sometimes the risk may need to be split out amongst several departments when you go to a broker. And the Spa is a very good example. The Healthcare and Human Services team can certainly help, but then perhaps you need to take a piece out for the business and there's a property exposure and they have to go to commercial binding, the people that have the pen to cover the property. Maybe the business needs some cyber coverage because they're taking credit cards all day long and people access their website to make appointments. And then I have also heard these nutritional IV businesses will have mobile businesses. They'll take the IV out to the community, whatever. Ricky did give me some examples. They were interesting. One of the examples that was posed was a bachelor party, and afterwards they rent the business, the mobile IV goes out. So there is an auto risk there, which again would have to go to a transportation like specialty area. What we don't want you to worry about is how you split that all up when you go to a broker. Get to know them, submit the risk, and they'll parcel that out for you. They will help you with that. You really don't need to know the carriers. You need to know the ins and outs and details of the risk. Next slide. How do I deal with the wholesale E&S marketplace? Well, in some cases, the market is a supplement, and sometimes it is a substitute for the standard market. And I tried to give you a couple of good examples where maybe you carve out one piece to supplement what the standard carrier will retain. But then the substitute, maybe they don't want to do any new ventures. You bring that into the E&S marketplace. The operations may look similar in the ways you're used to with the standard carrier. Sometimes the nomenclature changes. We do have underwriters, but we often say brokers. And I think Rick did a good job about that's very loose in the interpretation of who does what. But brokers, wholesalers, underwriters, they are the people that are helping you underwrite the risk. One of the things that I like to talk about is the importance of cultivating a relationship within our industry. Partnership sometimes refers, you think 50-50, but this is unique what you're doing when you access a wholesaler. And you really sometimes have to go that extra mile. You have to help cultivate that relationship and be engaged. You do have to explain the situation. And Rick noted, why am I here? Why are you here? And then going to as few brokers as possible is always a good thing. If you're routinely shopping out and going to all kinds of marketplaces, that will catch up with you. Develop a relationship with one or two and keep that solid. That will help you in the long run. Next slide, please. What makes a broker different from a standard? Well, brokers may operate again and look similar to the ways that your standard carriers do, but they have specialists. So the organization that Rick and I work with, and Rod is part of that too, has 12 specialty areas. So the underwriter or the broker that you're speaking to is usually kind of siloed within what they do. That's what they do all day long, day in and day out. So it's good for you. They know the markets, they know the risks, they know the coverages and products. Perfect for you when you access them. Brokers can oftentimes write a monoline policy. We talked about that with the monoline umbrella. And then they can package risks. Possibly you need a GL with a liquor liability exposure. And sometimes if they package those risks for you, They can be less expensive than a standard. I'm going to give you warning, not always, because there are minimum premiums involved, but sometimes they can. And then, as I noted, brokers can take the risk and split it up in many departments for you. They can be the lead quarterback when you contact them and then split it up and help you out with that. And then there's that carve out. They can carve out a portion and work on that for you. And maybe your standard carrier takes care of everything else. A good example of that is workers' compensation. A lot of times standard carriers will stay on the entire risk, but they don't want the work comp. So you could take that out to a broker and the standard can stay on the rest. Brokers can oftentimes find a solution. Right now, there are markets available. Warning, though, is that it can be pricey. But at the end of the day, you've done your job as an insurance agent to find a solution for your insured. Next slide. Expectations. What are your expectations as a retail agent? So it's a little different than going to your standard carriers and emailing on Wednesday and saying, hey, I need that quote by Friday. Remember, it's a very difficult marketplace we're in. It can be very stressful. I know you like prioritization, and there are ways to do that I'll get into here in a second that will help you with getting your risk prioritized. I know you look for ease of doing business. When I was an agent, path of least resistance, I get that all day long. And then who has access to the markets that you may need? And then that relationship building, here we are again. So a strong relationship with your broker is key. They don't want to just write one account for you. They want you to bring that business so you can cultivate that relationship, and they can help you as far as maturing within this brokerage type business. And remember, they are your negotiating partner. So work with them to get the information that the underwriters at the companies are going to need in order to make a decision. There really are no shortcuts in the marketplace that we're in right now. Next slide, please. Again, know what each one specializes in. What do they do best? What is their appetite? Coverage, classes of business. Go out on their websites and take a look at what they're doing. And then who are their markets? And get to know your underwriters. Kind of repetitive here, but very important. Next slide. Does the agency have the pen, the broker? And that means binding authority. I know, Rick, you use pen often, and that definitely means binding authority. Do they have it? And what is their binding authority? Do they offer the use of technology and automation? Do they accept court applications? And then what about their website? Is there information out there that is a great resource for you? And then very importantly, can they help service that policy after you've bound it with them? Will they help you? Will they work with you? Will they help you with selling points out to your insured as well? Service. Service is very important. If you want service, complete applications are key. Again, no shortcuts. Start with accords. If there's a supplement, the broker oftentimes will let you know what they need, and they will ask that you complete it, and don't leave blanks out there. Also, let the broker know if it is an emergency. Not everything can be a 3-alarm, 5-alarm fire, but if you want to put rush or urgent on something, let the broker know why. And if you're feeling like you're not hearing back, again, that partnership, drop a quick email, give them a call. Don't assume someone's working on something, but pick up the phone or drop an email to say, what have you heard about this risk? Statistically, Rick, you'll like this, about 80% of what brokers see come in is marked rush or urgent. So that's a tough one. Pick and choose. Your broker will start to understand if you're crying wolf. If really it is indeed an emergency, let them know why. Next slide, what to include with the submission. This is a laundry list. As Rick noted, we will give you this if you would like a copy of the PowerPoint presentation today. And this really talks about writing the story, telling the narrative to the broker. What do you have? Complete your court apps, get your loss runs in, details of losses. What happened? You know, describe what was mitigated. You know, are the losses going to occur again? The carriers want to see what has been done to mitigate those losses. Detailed descriptions, again, of the operations. And then website information that they may have, copies of their literature, financial information, contracts they've signed into, and hold harmless agreements. So these things will become second nature to you as you work in this E&S brokerage type atmosphere, but these are very important in telling the story of why you're coming to a broker. Notes and comments, I mentioned, next slide, include a brief summary. Why are you submitting this to the surplus market? Is the account being non-renewed? Who's the incumbent carrier and what are they offering? Do you as the agent control the risk? And then your management system may have a lot of history in there. Let them know the story. What has gone on with this file in the past? Who else have you gone to for a quote? And very importantly, what is the target date that you need the quote? And if you can, what is the pricing that you are looking for? And I'm going to just speed through these here, this last slide, Rick. Before you submit the application, ask yourself, is it complete? Again, if the broker is used to getting complete submissions from you, you are more than likely to have the best chance at being quoted first. Your broker has reputations with the carriers. They as well want to submit complete submissions so they keep up their good reputation with those carriers, and they get first looks as well. So it is a partnership all the way around. So Rick, with that, we are almost to the hour. If you want to go to the thank you slide, and we'll check on any chat and anything you would like to include that I may have forgotten, Rick.
Well, I will be the first to say thank you, Diane, for that. No, it was fantastic. Was fantastic. Any questions from the group?
I don't see any chat.
Well, I hope that everyone had a wonderful Labor Day weekend and that you are laboring now again at work. We are delighted. Again, thank you, Big I, Nebraska. Thank you, Diane. John, the volunteers, always volunteers. Thank you, thank you, thank you. And to all of you for your support of Nextgen, young agents, emerging leaders. You truly are the next generation, and we're delighted that you were able to be here and be a part of all of this. With that, we're
awesome.
coming to a conclusion.
Perfect. Well, Rick, Diane, thank you so much. It truly is great speakers like yourself that makes for great content like this. So if anybody enjoyed the presentation and think it would be useful to different folks in their agencies or offices, this was recorded, and at some point this will all be accessible by everybody. So that is one item. Just a couple housekeeping things about some announcements, things coming up. Obviously, IIAN convention is coming up October 5th through the 7th in Lincoln at the Embassy Suites. So I'd encourage everybody to get registered, come out for that. It's going to be a phenomenal conference with great speakers and different CE opportunities. And it's Carol McClellan's last convention. So encourage everybody to come out for that. On the young agent side, we have 5 scholarships that you can apply for. So would encourage you to take advantage of that opportunity. And then we're going to have different Nextgen events throughout the convention as well, such as a axe throwing at Tomahawks on Wednesday, October 5th. So there's going to be a ton of things going on. Encourage you to get out, get registered, come out for that. But again, I'm sure everybody's playing catch up today. Thanks for everybody for coming out. And if you have any questions about Nextgen or upcoming things, reach out to Jason or myself. And I'm sure Rick and Diane would look forward to any questions you would want to address specifically towards the surplus and excess market. So again, thanks to everybody, and we'll see you at the convention.